Good morning, sir.
Good morning. Good morning, everyone. Yes, good morning. So, can someone remind me where did we stood last time? I mean, where we have to start today?
I
If
guess
someone could remind.
conservatism concept, sir.
That was discussed in the last session, right?
Yes, sir. Yes, sir.
So we will start with the accrual concept, and then we will discuss realization concept, matching concept. Okay. Okay. And I think, in fact, I am behind in this section somehow.
Yes,
So
sir.
we would have to rush now, yes. And you may expect a quiz next week. Anyways, we would inform you by some means, but anyways, you can start expecting a quiz. And I'm going to upload this PPT with my section. I'm going to share through email with my section, right? Who is the CR of this course? Can someone tell me? I mean, so CR for this section,
Rohit, CR.
Rohit. So, Rohit, would you be able to mail me saying that you are the CR of this section, Rohit? If Rohit is around.
Sir,
Hello.
actually, many of them are having each been joining the class late, so they are joining. Can you wait for 2 or 3?
Sorry, I could not hear you
Yes, sir.
properly.
Sir, we are many of them were having problem in joining the class with the link.
Okay. So they are
They are not
joining.
joining.
So in case I
Yeah, yeah.
forget to inform Rohit, or please inform him, maybe through your communication means that
I do
ask
it,
him
sir.
to, है ना? Just so that I have a record that who is the CR, and when I have to circulate something, I can do it through CR or something. That's the only thing, right? No. Yes.
Sir,
Wonderful, Sparsh. Yes. Uh,
sir,
yes.
sir, can we take 2 minutes of your class? Actually, it's someone's birthday today. So, if you don't mind, just 2 minutes.
So do you have a class after this?
No, sir. No,
No,
just
sir.
let everyone join if you are of the 40 party.
So we can, I mean, you can celebrate the birthday, or you can wish the birthday maybe at 11, 12, 20 or something.
Okay,
Okay,
sir.
So
sir.
sorry,
We'll do it
I'm normally, of course, I'm very happy. Whose birthday is that, first of all?
Shriya, sir.
Yeah.
Priya.
Sriya.
So we can wish her maybe at the end. I know, but
Sure.
this would be, I mean, a good thing when you do it in the classroom. But we are in a virtual platforms, and because there is another problem that we have a recording going on, so it would not be good if I do it during the class hour, right? So
Okay, sir.
I'm so sorry, but we will definitely wish her. Everyone will wish her, right? Yes. So shall we start? It's 11:19, or shall we wait for few more
Sir, did you
minutes?
call me?
Sorry.
Rohit, sir, did you call
Sir,
me?
we can wait for 2 more minutes. Sir. There are only 49 minutes.
Sorry, I did not hear you, beta.
Sir, they
Sir,
are joining in, sir. They are having some issue in joining.
Why the link is same? Na? You were able to join, so there is no issue with the link, I
No,
guess,
sir,
right?
I was also not able to join. I logged into WebEx and in recently I saw you there.
Oh God. So sometimes devices can cause issues. Okay. Um, so just in the meantime, someone tells me, did we look at this example in the last session? This example? No.
No, sir.
Okay.
No, sir. No, sir.
Okay. So let us start with the accrual concept. See, we are discussing accounting concepts. Others would join. I will circulate the PPT, and I am also planning to keep a remedial session or something in case someone feels that this is like an alien language. It is difficult for me to understand. It's like I'm going to a planet where I don't understand what is happening. So for some of them, it may be accounting may be like that. So I'm trying to keep a remedial session during the extra hours, maybe in the evening, maybe in couple of days, so especially for those who have some concerns in accounting, right? And if as I have whosoever mails me regarding their queries, I'm replying back. I'm also telling them which YouTube channels or which books you should refer to in case you want to read more, you want to learn more. And anyways, you can always contact me through the email, and we can have a session, maybe one-to-one session, maybe a remedial session with the entire section, or maybe two sections, section A and B, based on your convenience, right? Fine. Let me just start with the concept, accrual concept. Yes, others are joining as well. Yes. So can someone tell me what is accrual concept, please? What is the, because I'm being discussing this for some time now, and this is not a
Try,
new
sir.
concept.
Sir, can I try?
Anyone could try. You can raise your hand and try also, right?
Yes, sir, we'll raise.
Okay. So Abhinav, please, you can start now, and then others can join
Okay.
by raising their hand. Yes.
Sir, accrual concept means the transactions which that take place related to the accounting year, but the payment for which has not been paid particularly in that same accounting year.
Okay. Okay. So anyone else? Parsh, I think, is trying to answer this question. Ritu maybe can join us as
Yes,
well.
sir.
Yes.
Sir, we record transactions when they happen instead of, sir, in recording them when the cash is received. We record a separate transaction for that. So, sir, when concept, we record the transactions of credit use, sir, and the concept of outstanding and prepaid are also introduced due to this.
Wonderful, wonderful, wonderful. You are going a bit fast and you are going to the next level that may not, a lot of people may not understand. So in simple words, transactions are recorded in the books of account. Shivam Rai has mentioned something in the chat box. So that may also be right. Transactions are recorded in the books of accounts when they occur, when they accrue, irrespective of whether the cash has been received or cash has been paid. So the moment transaction has occurred or the event has occurred, you record it. Does not matter whether the cash is received or paid. And so for that, just to test it, I have one small question for you, each one of you. I will ask randomly and please answer, try to answer, right? I will ask randomly to anyone. So Aditi Sharma ji, please, if you could answer the first question. You see, the information is given to us. The information is given like this. You are given the amount. You are also given how much cash is received, and you are also given the transaction that cash sales is made this year, last year, or maybe would be made next year. We don't know, right? So you need to tell me how much of this is revenue of this period. Please tell me, applying the accrual concept. So Satakshi, do not put your answers in the chat box because I want people to participate. So I will ask the first question, first situation. Aditi Sharma, I think. Yes. Yes, Aditi, please.
Yes, sir. Sir, actually, I have joined recently, right now, just 5 seconds ago.
That is fine. The accrual concept says that transactions are recorded irrespective of cash is received or not. That means
Yes, sir.
whether you receive cash or not does not matter. If the transaction has happened in that accounting period, it has to be recorded. So my question is, in all these sales transaction, how much is the revenue for this period, this year? This year is 1920. You can imagine 1920. Now
Yes.
start answering, please.
Cash sales made this year.
Okay,
So,
it is the
yes,
sales of
we
this
will
year.
include this. Yes.
We will include because the sales is made this year. The sales is the transactions, the sales is the event, right? And the cash received doesn't
Cash.
matter, right? Whether
Yes.
the cash is received or not doesn't matter. If it has happened this year, it is a transaction
Yes,
of this year. It is a
Yes,
revenue
sir.
of this year. So I hope everyone is okay with this. Sales revenue of this year for the first transaction is $200. That is the answer. Let me ask the second one. Maybe Dhruvangi can chip in. Dhruvangi, second transaction, please. Let me ask randomly. For the next question, I will please keep your raise hand as it is. I will ask next. Dhruvangi, please give it a try. The credit sales is made last year and the cash is received this year. How much is the revenue for this year? Yes.
So it's not the revenue for this year, right, sir? Because the sales was done last year only, no?
Yes, wonderful. See, cash is received this year, but the transaction had happened last year. So it is a sales transaction. It is a revenue transaction for the last year, not for this year. And because we are focusing on this year, it is not the transaction of this year, accrual concept. Once again, I'm repeating, especially for those who are finding it difficult to grasp when I talk very fast. Irrespective of cash is received or paid, the transaction is recorded when it occurs, when it happens. So it is recorded in the period in which it occurs, it happens, right? The event occurs, right? So sales has happened last year, transaction of last year. Does not matter when you receive the cash, right? Third transaction, please. Let me ask Parth, maybe. Parth, and I cannot see the full name. Okay, Parth Garg. Yes, Parth Garg, please. Third transaction, please. You have to unmute yourself, or shall I do it? I can also do it from my end. Shall I try to unmute you? Yes, I have done it. Yes, Parth.
Hello.
I can hear you, beta. Please give it a try. Third transaction.
Sir, 500.
No, I'm talking about only the third transaction. The credit sales made this year and cash received this year. How much is the sales for this transaction, beta? Please give it a try. It's okay. Give it a try. Okay, what is the accrual concept suggesting, beta? Can you repeat what is accrual concept? Transaction is recorded when it occurs. So when the sales has occurred, tell me. This year, right? This year.
Yes, sir.
So if it has happened this year, it is a transaction of this year. So cash is received this year is not important at all. The second part is not important. If the transaction is of this year, and if the whether it is received this year or not doesn't matter. It is a transaction of this year. It has to be recorded as revenue for this year. So 400 is the answer. The last transaction. Let me ask maybe Brishank. Brishank, can I ask you?
Yes, sir, you can ask me. Sir, we will record it because the transaction has been made this year.
Okay. So please mute yourself, everyone, because now the discussion is over. You see, so the total income for this year is how much? 200, 400, and 100, can I say? So the answer is 700. Someone had mentioned the chat box. He was right. So this is what accrual concept is. Now I will discuss the next concept, that is realization concept. Can someone try to participate, or I should right away get into the concept? Yes. What is realization concept, please? Someone has raised hand. Let me ask Abhinav first, and then I will ask Harshdeep, and then I will ask Aditi. Yes.
So means this concept states revenue is recognized immediately as the cash has been, income has been received. Realization concept.
Okay. Okay. Good attempt. Harshdeep, please. Harshdeep, please give it a try. Harshdeep, please. Guys, please be very fast. Okay. Okay, Harshdeep. So tell me, what is a transaction, beta? I mean, what is realization concept? If you could participate through your voice, otherwise I can ask someone else.
Sir, am I audible?
Yes. I can hear you. Yes.
Sir, I was not able to.
Sorry?
Sir, I was not able to unmute myself.
Okay.
Sir, according to the realization concept, the transaction is recorded in the year in which the cash or check is received.
Okay. So then, okay, let me ask Vaibhav also.
In 2019 and received the cash in 2020, so we recorded at 2020.
Okay, good.
So realization concept is also known as revenue recognition principle.
Yes.
May I, sir?
Please continue. Please continue.
Sir, realization concept is also known as revenue recognition principle, sir. Under this principle, the revenue is recognized by the seller when it is earned principal, and it can be recorded if whether the transaction is cash or not, whether the transaction is it in cash or not, or whether it is received or not.
Okay, so let me give you the situation. Let me give you the situation that I'm coming to your door, purchasing a mobile phone, and when I'm walking out, I'm also saying that I will never pay you. Tell me. I hope you get my question. You are, let's say you are running a mobile store. I'm coming to your, maybe I'm your friend or something. I don't know. I'm coming to your door, purchasing a phone or taking a phone in my hand, and then maybe running away, or maybe saying that on your face. I'm telling you, maybe I am a gunda or something. I don't know. I'm just telling you on your face that I will never pay you for this. Tell me whether you can you record this as revenue or not?
So maybe no.
No, sir.
Right. So why did I make this situation? Because you said that when the goods and services are provided, but you forgot the second part. So I'm repeating now. I will not be able to give others opportunity for this case right now, because we are running out of time. Revenue is recognized when the revenue is earned, and focus on the word and, or received or receivable. So what does it mean? So when someone comes to your door for buying goods or maybe getting services, You can say it is earned only when the products and services are provided to that entity. Means there is an exchange of products and services that you are giving. So I'm giving you my phone, I'm selling my phone to you, and on the other hand, you are paying me or you are promising me to pay in the future. Both has to happen. It has to be earned as well as received and or receivable. That means the products and goods or services should be provided, and the money should be paid, or money should be paid in the future. There is a promise to pay in the future. Both has to happen. That's why I'm saying received or receivable. So either of them is fine, and that is why we record credit sales also. Someone mentioned that when I was discussing accrual concept. So once again, I'm saying revenue is recognized when it is earned. And how can I say it is earned? Only when I'm providing the services for which it has been paid or it has been promised, right? So it is earned only when I'm providing goods and services, and it is received or receivable. There is a promise to pay or there is a payment for the goods and services someone buys, right? So I will take examples now. When you and I have been using this example so many times. When you book a slot on Urban Company, maybe for plumbing services, let's say I'm booking it right now for the Sunday service. When I am paying today, Urban Clap cannot say it is a revenue because it is not earned yet. It is received by them, but it is not earned yet. On Sunday, when I am giving 5 stars and I'm putting my feedback, and when I'm saying that I'm okay with the service, Urban Company can record it as revenue because the goods and services are already provided and the money I had already paid before the service is received, right? So because the service is not rendered yet, you cannot record it. So both has to happen, earned and received or receivable, right? It may also so happen that the goods are delivered first and the payment has not been made, right? So when the payment is made, or when there is a promise that the person will make the payment in the future, then also you can record it as revenue. And that happens in case of credit sales, right? That happens in case of a lot of transactions when you are giving goods on credit, but you are recorded as revenue as well, because there is a promise that that party would pay you. I hope everyone is listening this. Brishank, are you getting this, beta? Brishank, you can move your face. Yes, yes. Dhruvangi, Aditi Sharma, right? So remember, revenue is recognized when it is earned and received or receivable. Always remember these two things has to happen. Now, this is a very simple situation. Today we are living in a world where transactions have become very complex, right? I will give you an example, right? When you buy an iPhone, right? When you, let's say you are in America and you are buying an iPhone for 2 year with 2 years contract, right? And you are not paying upfront. Understand? Mobile phone is given to you, but you are paying in 2 years time. You see the complex situation. I will give you another example. When you are buying a PlayStation or Xbox, sometimes you are getting something free with it, right? Sometimes you are getting maybe I don't know what is that platform called where you go online and play, and sometimes you get the subscription of that for free for certain period. Now, how do you record that? Third example, when you are buying goods, let us say the example of operating system. When you're buying an Windows operating system, you are paying 10,000, 12,000 right now for buying a Windows operating system. So this is an income for Microsoft, right? Because you have purchased the official license. Now look at the situation. Microsoft is required to give you 3 years service. You are required to give you 3 years updates. So product you are for the product you are paying right now, but the services are to be provided for 3-4 years. They are giving you OS right now, but they are also giving you free updates in Android, free updates in Windows for Windows system, and free updates for maybe Office suite, right? You see, it is so complex. It has become so complex. So we are living in a world where it is not that simple, like the goods are given, the services are given. So on paper, this concept looks very simple, but in reality, especially because the world has become so complex and the way the business plans have become so complex, it has become challenging to recognize the revenue for these businesses, right? I hope you are listening to this. Komal, are you getting this, beta? Komal? Yes. Okay, you can move your face. That is sufficient. Yes, yes. Right. So I want to use an example just so that everyone has understood. Please participate. Aditi could not answer last time, so I want to ask Aditi one more time. Aditi, first transaction, please. You have to unmute yourself, beta.
I'm just reading the question.
Okay. Yeah, yeah.
Okay. So we have to supply goods 20 lakh is received this year, and supplied only for 10 lakh in 2019. So 10
And you,
lakh की ही करेंगे हम entry.
because we are
क्योंकि
preparing the
हाँ
books. for
Yes,
2019 calendar year. We are preparing for the
Yes, sir.
calendar year 2019. So you may have received money 20 lakh, but how much goods are
Hmm.
provided? Only 10 lakh. So the
Only
revenue
10
for
lakh.
you is 10 lakh
10
because
lakh.
received is 20 lakh, but earned is only 10 lakh. So earned should be considered, right? Earned and received both has to
Sir,
happen. Yes, yes,
sir,
yes, yes.
sir, rupees.
Hmm.
So we are going to that 10 lakh rupees.
Huh. So you
Because
are getting a bit technical now. How the journal? Uh, uh,
Regard
Yes, you are absolutely right, beta. I'm not getting into accounting part right now. I'm just focusing on revenue part. My focus is on revenue. What is the revenue? Of course, when you receive something, so there is a duality. Others can ignore this who do not know accounting. Cash account debit 20 lakh rupees to revenue 10 lakh rupees to the liability of providing services towards that entity, maybe X person to X 10 lakh rupees. So 20 lakh debited cash account, 10 lakh revenue, 10 lakh X person. So that is the entry. Let us not get into journal entries now. Right now, we will not discuss this accounting course from journal entries right now because all of you are at the same level now. Accounting journal entries does not help you making decisions. So my focus is a bit different in this
yes,
course
sir.
now. Our focus is a bit different now, right?
No,
Of
sir,
course, second
I
transaction, please let.
I just had doubts, sir.
Sure. Of course, I answered. I don't mind. Of course. May I ask Pratyush? I don't know the Pratyush Sharma. Yes, second transaction, please. Abhinav, I will ask you the fourth one. Fourth one. Abhinav, your fourth. Pratyush is second. Yes.
Sir, the amount of 6 lakh will be recorded
Okay. Okay.
because
And the
the 4 lakh is receiving in 2020 and we are maintaining the accounts of the calendar year 31st December 2019.
Okay, so let me add something. Supplied 10 lakh. Now tell me. Now your answer, please.
So 10 lakh.
You have supplied the goods worth of 10 lakh in 2019. That is the question. Let's say you have received 6 lakh this year and 4 lakh you will receive next year. How much is your income? Tell me. Revenue, tell me.
6 lakhs?
How much goods you have provided?
What 10 lakh supplied?
6 lakh he's giving you right now. 4 lakh he's promising you to pay next year. Received or receivable, I told you. So 10 lakh is the income. Receivable, it is receivable. 4 lakh he will pay you. He's not running away with this money, right? So when you are supplying the goods are delivered worth rupees 10 lakh rupees. And because you are receiving 6 lakh and there is a promise to receive 4 lakh more, the transaction is of 10 lakh rupees. So the income is 10 lakh rupees, right? Okay, the third transaction, let me ask maybe Namita. Namita, would you be able to help us, beta? Yes.
Sir, in the second transaction, what is the supplied transact at the end?
Sorry?
Transaction, sir, there is written a supplied transact.
Supplied goods worth rupees 10 lakh. That is what I'm saying. So it means that you have supplied the goods worth rupees 10 lakh. So you have delivered 10 lakh worth of goods and you are receiving 6 lakh right now and you are going to receive 4 lakh next year. What is the income for 2019? So 10 lakh you are supplying in 2019 only. I just added that information so that there is no confusion. Right? Yes, third transaction, please. Let us just rush through this fast. Maybe I had asked someone. Please.
Yes, sir.
Yes, third transaction, beta.
What do you think the good savings hold on credit and payment is received? Sir, according to me, this won't be in our general. Entry will not take place.
But you have supplied goods worth rupees 20 lakh, right, in 2019?
Yes.
So now tell me.
So the entry of payment which has been done in 2020 won't take place, but which is in 2019 will take place.
Okay. So the income for 2019 is how much? 20 lakh. Once again, the same situation. The goods are supplied worth of 20 lakh. So you have supplied goods, you have earned 20 lakh and received 15 lakh. But how does it matter? Because 5 lakh is going to pay you next year. Na? So 20 lakh is your income, just like the second case. fourth case, I think Abhinav had been given the opportunity, had been allocated the opportunity.
Yes, sir. Sir, for year 29, it's 10 lakh.
Wonderful, right? So advance is received in 1 lakh doesn't matter
Yes,
because
sir.
you have supplied goods worth rupees 10 lakh rupees. That's why the income is 10 lakh. I hope all of you understood this, and anyways, we will practice this more over sessions and you will understand this, right? I'm going to the next concept, matching concept, very important concept. I will talk for some time and then I will ask a few questions. When I say matching concept, again, a very powerful concept, I'm talking about three things: accounting period for which I'm recording the transaction, the revenue, and the expenses. So let's say I'm recording the transactions for the accounting period 2019-20, right? 2019-20, right? So when I'm preparing the financial statements or when I calculate the revenues and expenses, I will record the revenues I have earned in 2019-20 and I will record the expenses of the year 2019-20. So matching concept says that for the same accounting period, the revenue of that period and the expenses that you have incurred to honor the revenue for that period has to be matched. Once again, I'm saying, so when Nirmaj University, let's say if it is a profit making business, I'm saying if, right? So if it is a profit making business, all the revenue that they have earned in 2019-20, all the expenses they have incurred to provide education to you so that they can earn a revenue of 19-20 is compared. And while comparing, if the revenue is exceeding expenses, there is a profit. If the expenses are exceeding the revenue, it is loss. I hope everyone understand. Shubham, is it fine, beta? Shubham, right? So when I say matching what? You are matching the revenue and the expenses so that you can know the profit of that period, right? And that's the idea of doing this accounting. The idea is to know your performance and the idea is to know your position, right? Now, when we are recording, yes, someone has a question. Yes, please. Yes, please carry on, beta. Someone had a question, please. Or it was mistake. Samuel, you want to participate? You can participate, beta.
Sir, I just wanted to ask, sir, am I audible?
The audio is a bit low, but you can anyways ask it. I will try to understand. Yes.
Sir, I was asking that by matching concept, does it mean that the revenue and the expenses for the accounting period have to be same as in figures as well?
Absolutely right. I cannot compare the revenue of 2018-19 with the expenses of 2019-20. That is what I meant when I say this. That's why you have to keep in mind three things: the accounting period for which you are recording, the revenue for the year accounting period, and the expenses of the same accounting period. You cannot match the expenses of another year with the revenue of this year. That's the idea, right? And does it make sense? Of course, it makes sense. You cannot compare the revenue of maybe 2001-2 with the expenses of 2019-20, the extremist example, right? That's why, because you want to know the performance of a particular period. That means the revenues and expenses are to be of the same accounting period for which you are preparing the financial statements, right? I hope everyone is getting this. Pratyush, fine? Sure, everyone. Please stop me if it is Sparsh, Akshat,
Sir?
Amar, Rad, right?
Sir?
Anil, Shanshuman, Amrita, right? So now the second stage is what is expenses, right? Expenses could be of two types: product cost and period cost. Product cost is the production cost when you are manufacturing goods. So it is also called sometimes direct cost. So let's say I am selling. I will just make an example. Let's say I am a I am the reseller of ACs of Panasonic brand, right? Let's imagine that, right? And during the year, I have purchased 100 ACs and I have sold 80 ACs, right? So what is the product cost? Because I have sold 80 ACs, the cost of 80 ACs is the product cost, because that is what I have sold this year. Cost of goods sold, right? So expenses are classified into product cost and period cost. The expenses which are incurred, which are directly aligned to the goods and services I am selling. Okay, Parth is asking. Parth, yes, Parth, yes. Yes, Parth. Yes, Parth. Parth Adesra, someone, I think he raised hand.
Sir, I was the one who was asking.
Please ask me, yes.
Sir, as you said that in the accounting concept that the
Hmm.
transaction realization concept that we did till now, and the matching concept you
Hmm.
said that you have to expense
Yes, yes.
match.
So see, matching concept is one thing, right? So in matching concept, because there is a lot of your voice is cracking constantly, beta. Sorry. Hello. I'm not getting your question. I would request you to type it. Maybe type your question because I'm not able to hear you, beta. Let me repeat one more time. See, matching concept focuses on revenue and expenses, right? So revenue, how to recognize the revenue? We have discussed that in the revenue recognition or realization concept. Now about expenses.
Hello.
Now what expenses I should consider? The expenses of the same accounting period. Now there are two kinds of expenses: product cost and period cost. Product cost says that when you are selling goods, the cost you have incurred to produce those goods is the product cost. That should be accounted in the same accounting period, right? And the period cost says does not matter whether the cost is see, period cost comes in the picture when the cost has nothing to do with directly with the product you are selling. I will take an example. Let's say I'm working in Infosys, right? And in Infosys, let's say they have paid salary to all their employees even when they have not worked during the COVID time. Now, so that means whether the company has any output, any company has provided any services or not, does not matter. The salaries are paid. So the salary has nothing to do with the output, nothing to do with the goods and services that the company is selling. The cost is of that period that has to be recorded. The example is salary of staff, maybe the depreciation expense, maybe. So all the expenses which are associated with that accounting period, but has not cannot be linked to the products and services that you are providing is period cost, right? So matching concept, once again, I'm repeating this for the last time, maybe then I will take questions. Matching concept says that the revenue should be matched with the expenses of that period in the same accounting period. Expenses can be classified into product cost and period cost. Product cost example is the cost that you have incurred, which becomes the part of the product, which is incurred so that you can produce the goods is product cost, and period cost is those expenses which cannot directly be associated with the product you are selling but are important for the business, are to be incurred, because without the salaries, without, I'm sitting in the classroom now, whether there are 60 students or 65 students or maybe 10 students, doesn't matter, right? The cost of using this AC, that is depreciation cost, is constant. Another example, in this classroom, empty classroom, I'm sitting, right, and I'm teaching you, right? The electricity is there. Now, doesn't matter whether the students are there or not. The cost is fixed, right? So this is not linked with the service that the Nirma is providing. So it is a period cost. Now I will take questions. Yes.
Sir, in product cost, you give an example for AC 180. Can you explain that again, please?
Sorry?
In product cost, expenses, no type of expense product cost. You gave one example of consuming AC that you bought 100 and you sold 80.
So
So can you explain that?
product cost is the cost you have incurred to produce goods in case of manufacturing business. In case you are a merchandising business, the cost you have incurred to acquire the goods is the product cost. So let's say I'm in a merchandising business, or I'm a reseller. So in that case, I'm not manufacturing ACs, right? So for
yes,
what do I do? What is my activity? My activity is to purchase ACs and then sell ACs, right?
Correct.
Right. So what is the product cost? The product cost is the cost of ACs I have purchased during the year, which are also sold, right? So let's say I have purchased 100 ACs, and I don't want to get into difficult math right now. I have purchased 100 ACs at a certain price, and out of that I have sold 80 ACs. So how many ACs I have sold?
80.
what is the revenue? Revenue would be of 80 ACs, right?
80 yes, 80
So
ACs.
I cannot take the cost of 100 ACs because I have not sold 100 ACs. I have only sold 80 ACs. So I will take the cost of only 80 ACs because the revenue and the cost has to match, right? The revenue and the cost has to match. If I compare
Yes.
the revenue of 80 ACs with the cost of 100 ACs, it is not fair, right? It is not following matching concept, right? So I hope this example makes it more clear, right?
More clear, yes, sir.
Yes, yes, wonderful, wonderful, right?
Thank
So yes, yes, of course, beta. So matching concept. Another example I have of expenditure and asset, and this I had covered in remedial also. Whenever you are acquiring goods, services, or anything in the business, any resource in the business, when you incur money, or you may be buying that on what do I say, on credit, it is expenditure. So whenever you are acquiring goods, services, or anything, any resource in the business, it is expenditure. If the economic benefit is exceeding 1 year, it is asset. And if the economic benefit is less than 1 year, this year only, it is expense. Right? I have an example: insurance policy. Now this does not happen in real life. Let's say I am purchasing an insurance for 3 years, for 3 accounting period: 1920, 2021, 2122. So on 1/4/19, when I buy this policy, 90,000 is the expenditure, right? Out of that, because the benefit is for 3 years, 90,000 is for 3 years. 90,000 divided by 3 years, 30,000 is the expense of the year 1920. So in the financial statement of 1920, 30,000 would be recorded as expense, and 60,000 at the end of the year would be lying in the balance sheet as asset, right? At the end of 2020-21, 30,000 would be expense for that period, and 30,000 would be lying in the asset. And at the end of 2021-22, that is 31st March 2022, the asset would be 0 and the expense would be 30,000. So what I have done, the expenditure got converted into expense and also asset over period, because the benefit is exceeding 1 year. Please, if anyone has question on this. So this is also kind of a matching concept of for period cost. Yes. Anyone has questions, please ask me. Otherwise, we can move on, guys. Please. Sure, guys? Hello. So Vikas Dugar, what is matching concept? Can you give it a try, Vikas, please?
Yes, sir. So matching concept said that the expenditure, when we compare the expenses and assets, it should be on the same like financial year.
Sure. So not assets, you should say revenue. So revenues
Sorry,
and expenses
revenue
are
and
matched in the
expenses.
same accounting period is matching concept. And when I match the expenses with revenue, there are two kinds of expenses: product cost and period cost. So product cost has connection with how many goods you have sold, and period cost has nothing to do with the how many goods you have sold. Period cost means the expenses incurred in this period, irrespective of how many goods I am producing and selling. If it is an expense of this period, it is a period cost, right? So the example is insurance premium. Maybe the example can be salary, right? That is indirect cost, or you can also say period cost, right? So that is it. Anyone has any question? Please show your face and tell me, beta. Please start your camera. I'm so sorry, but I have to check this. Please start your camera, and so that I could know from your faces. Ritu, Aditi, please. Did you understand, beta? Komal, Pakhi, right? Sure, Pakhi, Isha, Brishank? Yes, yes, right? Okay, so last two concepts are left. What is consistency concept? Can someone give it a try? Let me ask. Harshdeep was not clear last time, I think. Who is this? Who is? But Deepal Bhojwani, I think Deepal has
Sir,
participated. Komal, after Dimple, you are going to participate. Yes.
Sure, sir.
Dimple, please.
Yes, sir. So consistency concept means that if you're following one particular rule, you should consistently follow that. So for example, if you're following a LIFO method or a FIFO method, then it should not happen that in 1 year I'm following LIFO, the next time I follow FIFO, so that the consistency in terms of maintaining the records is contained.
Okay, wonderful. Komal, please.
So if we are following the one particular rules or principles, then it will be easy to compare the reports and the results.
Okay, okay. Vaibhav, please. Vaibhav, also give it a try, please.
So consistency, it means that the financial statement of the company should follow the same accounting principle, method, and practices.
Okay, consistently over periods, right?
Yes,
So
sir.
all of you were absolutely fine, absolutely right. See, when I'm adopting an accounting method, I should be consistent with it over the periods. I cannot, as someone has mentioned, I cannot use LIFO method this year for inventory valuation, FIFO method next period, and then again LIFO method next to next period, right? The reason is that then the users may not understand, the users may not be able to make a sense out of it, right? I will because she had already taken the example of inventory valuation. In India, LIFO method is not allowed. Last in first out method is not allowed, and I hope everyone understands FIFO LIFO method. If someone does not understand, please raise your hand. So there is another point.
Ma'am, what is LIFO and FIFO?
FIFO stands for first in first out. LIFO stands for last in first out. So what does it mean? I'll tell you. For inventory valuation, see, businesses cannot go to the go down and check each of the inventory they have and check the price and make the total. Accountants or no one has time to do that. So what they follow a policy to value the inventory lying in the business at a given point of time to capture the position, right? So what they do, there are two methods: FIFO, weighted average, and LIFO. LIFO is not allowed in India. So what is FIFO? FIFO says that first in, first out. So the goods you have sold are the ones which came first in the business, right? So whatever you have received first is supplied first to the customers, right? According to LIFO method, what came last is supplied first to the customers, right? So let's say you are receiving 10 mobiles today, 10 mobiles tomorrow, 10 mobiles day after tomorrow, right? So when I'm selling mobile phones, and let's say the price of each of this phone is different, the same model, but the price is different, maybe because of a lot of changes between India and China, I don't know, right? So when I'm supplying the goods, so what I should say, if I have supplied 15 mobiles, I will assume that I have supplied 10 mobiles from today, 5 mobiles from tomorrow, and the remaining are lying in my inventory. And the value is FIFO method. Whatever is lying, the value of that is the inventory value. There is another method, last in first out. That is not allowed in India. It assumes that what came last in the business has gone out first from the business. Now it is not applied in India, but it makes sense for certain industries. I will take the example of alcohol. Tell me which kind of alcohol goes first. And I'm in Gujarat, so I do not know much about alcohol. Right? So please, if I make a mistake in explaining alcohol, pardon me. Right? But according in America, LIFO method is good for alcohol. Why? Because what goes out first? The last one, because the last one is always cheaper. If the more the period the alcohol is there in your business, the expensive it gets, right? So last LIFO method makes sense for certain businesses, right? So in America, LIFO is allowed. In India, LIFO is not allowed. In India, FIFO and weighted average is allowed, right? If you want to get into the communication calculation part, it is very simple. Don't worry. You all are engineers and coming with very good background. So when we do practicals in the future, maybe the practical part, the calculation part is very straightforward. But the logic is what came first has gone out first. That is FIFO method, right? So जो पहले purchase किया था वो पहले मैंने बेचा है. That is the logic. So what is available in the business? What is there in the business? What is not sold? That is the last. Came in last in the business. That's the idea. Abhinav got it better? Abhinav? Yes. Okay. So there is another example for depreciation. You cannot use. There are multiple methods of depreciation, right? I can go for SLM method. I can go for WDV method, straight line method, written down value method, or maybe machine hour method, depends upon the assets. Now, Companies Act is allowing you to select the accounting policy that is fit for your business. That is fit for your business, because you are running your business, you know better which method to use. But you cannot change the method every year. Again, on the same line, you have to be consistent with the method that you have adopted for depreciating your assets. And it applies at so many levels, I'm telling you, right? So that is the concept. So consistency concept says that if the company has adopted the accounting method, accounting rule, or accounting policy, company should be consistent, business should be consistent in approaching, in using that accounting policy, right? If I have a very vague example. Let's say I have purchased an asset for 5 lakh rupees. In the first year, I'm recording at purchase price. In the second year, I'm recording at market value. In the third year, I'm recording at market value. In the fourth year, I'm recording at purchase price. not consistent, right? क्या आप इन्वेस्टर क्या सोचेगा, ये भाई ये 5 लाख में लिया था, नेक्स्ट ईयर 10 लाख हो गया. You see, Infosys had invested investment in Japan. Last year, company had invested 5 lakh. This year, the investment value is 15 lakh. Oh God, third year, 20 lakh in terms of rupees, converted yen into rupees. In the fourth year, why it came down to 5 lakh rupees? You see, users may not understand this. You have to be consistent with otherwise, right? And if you allow companies to do this, companies can manipulate these numbers just to show more profit or less profit, right? That's why this rule is also very powerful. Auditors would make sure that the assets are recorded, keeping in mind this concept. They're consistent with their approach in adopting the accounting policy, right? The same example, right? Last
Sir?
concept. Yes, please.
Sir, the inflation price is not included in the accounts.
No, that is the
Sir, where do we record that? So, for
we don't
example, if a
record that. We
product-
never record that. We never incorporate inflation in our books of accounts. We never incorporate. That's the limitation of accounting. So accountants say that what you had purchased for 100 rupees today, the value of that is 100 rupees only today. Even if the value of currency has changed according to the accountant, because accountants are living in their maybe Disney world, in your language, they're living in a world where for them the value of money does not change, but the inflation does change the value. You know that. So accountants don't know how to. There are practices. There is inflation accounting, but for presenting the financial statements, inflation accounting is not taken care, is not used. That is the limitation of accounting, right? Because the accountants are rule driven, and the moment you allow someone to be flexible with the rules, you know what they can do. You know what they can do, right? So that's why accountants are like machines. They have rules for everything, and whenever they find leakage in the rule, they make new rules. That's how they live. So every night before they sleep, they make sure that all the rules are applied. And if something is not applied, they will make another rule. So that's how we make fun of accountants or make fun of accounting sometimes. When I'm teaching finance, of course, accounting is fun, of course. But when I teach finance, I also make fun of accounting. When I teach accounting, I make fun of finance. That's how I am. So I change my nature, my behavior based on the course I'm teaching. Yes. So last concept, guys, everyone, please focus. Materiality concept, and this concept is in line with full disclosure concept, right? So according to the full disclosure concept, all important significant information should be fully disclosed to the users of accounting information. So what is materiality concept? All material information should be provided to the users of accounting information. That means insignificant information can be disregarded, may be disregarded. Now I have a question. How do you decide what is important for the users and what is not important for the users? How do you decide? Isn't it subjective? Isn't it subjective? Right? So how do you decide this information should be there because of full disclosure concept and this information should not be there as a materiality concept? Can someone give it a try, please? Abhinav, I will give you the chance later maybe, because I have asked you a couple of 2-3 times. Maybe Vikas Dugar. Yes, Vikas Dugar. Vikas ji, please.
Sir, I don't know about that. Sorry.
Okay.
So may I?
Who is this?
May I, Aditi?
Aditi, please. Yes.
Sir, the decision which affect the purchase from the side of
decision that
user.
affects the users in decision making, that is the answer. The decision or the information which affects the users in making the decision is a significant information. I know it is subjective, but that is the bottom line. How do you decide?
Like companies facing some issues and have some court cases on it, so they have to, they have to circulate the information.
But my focus is on financial information. You are talking about any information. I'm talking about financial information. I will take a very vague example.
Creditors.
Okay, you want to participate? Please participate. Yes, participate. Yes, please go on, beta. Please go on.
Sir, like creditors are also the users, so like financial information. So we have to show them that we have cash availability or something like this.
Let me take a vague example. Let's say Infosys has purchased a stapler of 50 rupees. Do they need to show this in the balance sheet as a fixed asset because the stapler could be used for 10
No,
years, right?
sir. No, sir.
Because is it going to affect? अरे भाई Infosys के पास stapler में invest करूँगा.
No, sir. Not at
It is
all.
not going to affect the users, right, in decision making. So even if the asset could be used for 10, 15, 20 years, this decision will not change the this information will not change the decision of the users, and that is how you decide the information is important or not, right? So when the information can change their opinion about the company, that is material information, that is a part of full disclosure.
Yes, sir.
Right? The stapler cost is insignificant. So I'm not saying you don't record. I'm saying that you don't record that as a fixed asset. That the asset is for, just imagine for fun that you have a balance sheet of Infosys and you have 100 pages balance sheet, because you are also showing staplers, you are also showing pen, pencils. Feasibility problem. Remember 3 concepts: relevance, reliability, feasibility. Companies does not need to spend money which does not affect the position of the business or does not affect the users in taking decisions, right? Feasibility, right? Another example, telephone bills. I have received, because telephone bill cycle is always different than the business cycle, business year, right? Accounting year, right? Let's say I'm preparing my financial statements on 31st March and the telephone bill is received on 10th of March. So how do I account for expense? Do I need to proportionately calculate the expense for 10 days and for 21 days? No. The moment I receive the bill on 10th, and I will receive the bill of this month in next cycle, 10th of maybe April, I don't need to go forward and calculate the expense for 21 days, that is for 11th to 31st March and first 10 days. I don't need to do that. I will just look at the expense of the bill that I had come on 10th March and I will pay that. I will record it as an expense, because 1 or 2 rupees or maybe 10, 20 rupees or maybe 30, 40 rupees is not going to affect the users, right? It is not that significant. So accounting method is not perfect. Accounting is not perfect, but accounting also captures this moments in accounting or information where it helps users in making decisions, right? So I hope anyone has questions, guys, please. Right? So this one few more examples. Maybe buying a mobile phone may be a big deal for store, but may not be a big deal for Tata. So materiality differs depending upon the size of the organization or depends on the type of organization. For Tata, 10,000 mobile phone should not be shown, but for that store should be shown because it may be a big deal for them. It is a significant transaction. But when you're buying a truck worth of 35 lakh, it is significant for both. Right, Dimple? Right, Pratyush? Right, Isha? Right, Ritu? Right? Yes. So that's it. Another example. You see, when you see the balance sheet or income statement of any company, balance sheet particularly, you see this, look at the first table, 54,690,312.87. Now, if Infosys or Tata is there, this 87s are going to affect the users or not? Tell me. No, the 87 cents are not going to affect the decision-making process. So they can round it off. Or they can also show the amount in thousands. They can also show the amount in millions, because that is easy to communicate. That is easy to understand. If I write in multiple zeros, there are students, there are people in life who are not comfortable with numbers. And if you write in full values like 10, 15, 20 zeros, it may be difficult for them to understand also, right? So that's why whenever you see the balance sheet in any company's annual report, you will find values in thousands and lakhs and millions, because of materiality concept. Those you don't need the information like how many rupees are there, why Infosys has recorded 12 rupees less. Look at the size of Infosys and look at 12 rupees. It is not going to change their opinion about the company, right? Because of materiality concept, right? So there are qualitative concepts also that I have discussed: relevance, reliability, understandability, and objectivity. This is not important from the exam point of view, so I'm not discussing this right now. I will put this in the PPT maybe, right? Okay, so I will just go to the next part of our this thing today. I will stop sharing this first. Okay, then I can save later maybe. Now there is a second PPT that I need to share with you. It is about accounting equation. That the new topic we are discussing now is accounting equation. we have very less time, so please help me. So we are going to prepare financial statements in this format for this couple of classes. So you see, we are slowly getting into balance sheet and balance sheet particularly using this equation. So what is accounting equation? Can you see the PPT now? Accounting equation, guys? Yes, wonderful, right? So you remember this balance sheet of mine? You remember this balance sheet? So on one side you have resources. They are called assets. I told you they are called assets, right? Please everyone follow this. The resources of the business are called assets, and who has claim over this is liability or equity. So if someone outsider is giving money to the business, that is liability. Or if the owners are giving money to the business or have a claim in the business, that is net worth, also called equity, right? So one side is called assets, the second side is called liabilities plus equity. That is the formula. Please remember this formula, accounting equation formula. Assets are always equal to liabilities plus equity. I want to ask a few questions. I have received interest on my saving account. Tell me what happens. If I receive interest on my saving account, tell me what happens. Anyone can participate.
The bank
So
account
that
will
will
increase
come in the
with the revenue.
side.
Cash in bank will increase.
So my saving account balance would increase because it would be credited to my bank account directly. So my bank balance saving account, maybe it would be 39,000 or 39,750 or 39,900 maybe, because I have received the interest. But on the other side, tell me where it would go.
Sir, the capital, the equity will also increase. The income.
Wonderful. The income belongs to the owners, so it becomes the part of equity. When you receive income, it belongs to the owner, so it increases the income. The income increases the owner's equity or equity. Wonderful answer. I hope everyone is following this. Let's say expenses are paid. I have paid telephone bill, 200 rupees. Let's say, what is going to happen? Tell me. And I have paid from cash account. Let's say in cash. Let's say. Anyone, please.
Sir, cash goes out and you decrease your liability.
So you see, there is always a duality following. Everyone agrees upon this. You know, when I am receiving the interest, you are absolutely right, beta. When you are receiving the interest, your bank balance goes up and your net worth goes up, your equity goes up. When you are incurring expenses, your cash balance goes down. But your claim on that cash is also reducing because that 200 is gone out of your pocket. That means your stake, your claim in the business goes down. Makes sense, right? Everyone is following this, right? So what I'm trying to tell you is that, right, the owner's equity goes up when the investment by the owner goes up, or when the business receives revenue, owner's equity goes up. Second, when the owner withdraws money from the business, owner's equity reduces, or when owner incurs expenses, owner's claim in the business reduces, because expenses reduces cash as well as owner's equity, duality, right? So just to repeat what I just said now, this is the classical way of looking at it. Business is a separate entity, so we are recording the transactions from the business perspective, and this is how the equation has come in the picture. The stuff that the business owns is always equal to stuff that the business owes. Now, if the stuff is owed towards the owners, it is called equity. If the stuff is owed towards the outsiders, it is called liabilities. So assets are always equal to liabilities plus equity. And when I say assets, I'm talking about all kinds of assets: cash, accounts receivable, inventory, plant, property, equipment, land and building, investments, goodwill, etc. And when I say liabilities, I'm talking about accounts payable, trade payables, means creditors, loans payables, wages payables, taxes payables, and equity means two things: the capital that I have invested and the retained earning, right? So this is the formula. See, the formula has been expanded. This is how the formula has been expanded. Assets are equal to liability plus equity. Equity is the owner's claim. So owner has claim in the business for two reasons: capital, and also because the business makes profit. Profit gets accumulated, that is called retained earnings. So every year when company makes profit, that profit gets accumulated, gets built up, that is called retained earning. And retained earning can again be divided into previous year profits and current year profit, and current year profit is a function of revenue and expenses. So that means When you receive revenue, equity goes up. When you pay expenses, equity goes down. Everyone is able to follow this formula? Please tell me. Hello? Abhinav, Nimesh, please. Brishank, Isha, Komal, right?
Yes, sir. Yes, sir.
ये इसको दिमाग में fit कर दीजिए बेटा. You can take the snap also in case you want to take it, right? Okay. So that is how it is. So let us start solving the question. I think we have only 4 minutes, but we can still cover a couple of questions, right? This is the answer. I should not show you the answer. I will share. So please take the snap of this question, and everyone anyways has a question, and it is mentioned in the outline. So go to the 62nd page on the textbook, or you can take the snap right now as of now, just so that it is convenient and easy for you to access. You can take the snap, right? Problem. Now I'm going to share the Excel file with you. It is going to be challenging for me to use this because normally we have board to carry out this activity, but fine, we will manage. I will open the Excel file. Yeah. So what is the first transaction? Can someone tell me? What is the first transaction? Can someone read, please?
So Manohar invested.
Anyone, only one at a time. Yes.
Yes, sir. Manohar invested 30,000 cash in the company's share capital. Shares worth rupees 10 each.
So what I have done just now is that I have written the equation. If you can see my cursor, assets are equal to liability plus equity, right? Now, because I have already solved the question, I know what kind of assets are there, right? When you are doing this in your notebook, what you can do, you can keep 3-4 columns, 5 columns, and then you can also keep columns for liabilities, and you can have one column for equity, right? Because I have already solved the question, I know what kind of assets are there. So let me remove that right now so that it is easier for us to understand. Okay. So first transaction, what is the first transaction? Tell me. The cash, the business owner has brought cash into the business capital, right? Hello?
Yes, sir.
Yes, sir.
Yes, sir.
Yes.
Guys, we are recording the transactions from the viewpoint of business. So when the owner brings cash into the business, what happens? Tell me. Cash increases in the business. So should be added, right? Should be added, right? How much?
30,000.
Only one at a time, because a lot of people are talking at the same time. Please. How
30,000.
30,000. So when the cash comes into the business, asset goes up, asset increases by 30,000. Asset increases by 30,000. And when the owner brings something in the business, that is capital, right? And that increases then increases the equity, right? So I will also write on the equity side. Don't look at the amounts forward. The first, you see the transaction is balancing 30,000 on this side, 30,000 on this side. So what happens when cash is brought into the business? Cash of the business goes up. At the same time, this cash belongs to the owner. So who has claim over this? Owner. So I will write this under equity. Second transaction, please. Do you have class after this, guys? Do you have class after this? No. So if I can take 2-3 minutes, if you allow me. Yes, second transaction, please. What is the transaction, please?
Bought supplies of photographic materials on credit, 9,000 rupees.
So supply is what? Supply is asset or expense? Supplies is asset, right? Office supplies are asset, right?
Yes.
So I should write that on the asset side. I will write office supplies because it is a kind of asset. Why it is an asset? Because it has economic benefit more than 1 year. I can use this office supply for more than 1 year, right? So I have purchased office supplies. When I am bringing asset into the business, plus, I will add that. How much, please?
9,000.
9,000. So
9,000.
yes. So my office supplies goes up. So what is the duality? When I'm purchasing this on credit, my liability goes up because I'm not paying, right? If I am not paying, I have to pay in the future. So that is my liability. So I will also write this under liability. The name of the liability is trade payables or payables, accounts payables. You can say whatever you want. It should convey the message. That is what I'm saying. So trade payables also goes up. So you see the total is always matching 39,000 on this side, 39,000 on this side. You can see the total at the end, 39,000, 39,000, right? Right? Please, everyone is following this or not? Tell me.
Yes, sir.
Yes,
Right?
Yes, sir.
Yes, sir.
Yes, sir.
Yes,
Yes, sir.
Because if anyone has a question, please ask me. Third transaction, please. Fifth dated transaction, please.
Bought.
So photographic equipment is an asset, understand. Bought photographic equipment is an asset because it has benefit for more than 1 year, right? So I will record it as another asset. That's why I had column ready, right? Office equipment, photographic equipment. How much worth, please?
12,000.
12,000.
12,000. So assets are going up in the business. I'm paying by cash. So my cash balance reduces. You see the balance sheet would match 39,000. Because when I'm buying the office photographic equipment, my assets are going up, but my cash balance is reducing, right? So my cash has reduced from 30,000 to 18,000 now because 12,000 is deducted. And for this 12,000, I have purchased another asset called photographic equipment, right? So you see, this is how the duality works in accounting equation, right? Am I going too fast or not? Tell me, am I going fine? Abhinav, Anshuman, Isha? Science students, any science student can raise their hand. Dimple, are you getting it, beta? Dimple, you can move your face and say yes. Akshat,
Yes, sir.
Aditi Sharma, please say something. Aditi Sharma. Okay, you seem to be okay.
Sir, will there be any other column of expenses?
So what are we going to do? Because income statement is a subset of balance sheet. For this accounting equation, I'm not going to put extra columns for income statement. So what are we going to do? We are going to directly give effect into the equity, because what is the formula? Revenue increases equity, expenses reduces equity. And I will tell you another reason. See, in fact, in business, there are millions of transactions. So you cannot prepare the balance sheet like this. You cannot know the position like this. That's why we have a system that is financial statements, balance sheet and income statement separately, right? But in reality, this is what happens. And from this equation, the accounting has come. From this modern equation, the accounting is built up. I mean, the foundation is this equation, right? And so everyone must know. And I will also tell you why this makes more sense than the accounting process we followed, journal entries and all that. Because in journal entries and all that, you just do because you have to do it. When you follow this accounting equation, you can actually imagine what is happening in the business. You can actually see what is happening in the business. You can actually capture the position at a given point of time. So this is better for understanding. This gives you a better perspective about the business through this method, right? Fourth transaction, please. Received fees for photographic services, please.
Excuse me, sir.
Please.
So Aditi just texted. She's in the waiting room. She had to leave because of network issues.
Just yes. I cannot see any names in the waiting room. So the moment I see anyone, the name pops up, so I can allow, but it is not there. So ask her to again try. Fine. Seventh transaction, seventh dated transaction, fourth transaction, received fees for photographic services.
15,000.
So what is received fees for photograph? This is your business, understand? So anything you receive for your principal business activity is your income. Can I say that?
Yes, sir.
Right? So it is your income, and income increases your equity. Can I say that?
Yes.
Income increases your equity. So I will write here how much, please?
15,000.
15,000.
Yes.
Have you received this in cash?
Yes.
Yes, sir.
I will also increase my cash balance because I have received cash. So I have received 15,000 cash. I will add in the cash column, and because I have received fees is my income. It will increase my equity. So you see the balance, the total would always match. I know this is Excel, so it becomes convenient for us to do it. But when you do it in the notebook and you verify after each transaction, it has to match. If it is not matching, you have committed the mistake. That is the power. 13th dated transaction, please.
Paid creditors for supplies 5,000.
Creditors are basically trade payables. So let me also write the name creditors so that there is no confusion. Yes. Okay. So you have paid trade payables. How much you were supposed to pay? 9,000?
5,000.
No, you were supposed to pay 9,000, right? From this column, it seems that you were supposed to pay 9,000, right?
Yes, sir.
Yes, sir.
How much you are paying?
5,000.
5,000.
So how much is payable now? 4,000. You see highlighted portion, right? And you, because you are paying by cash, your cash balance goes down. See, the balance is matching. I know I'm showing this to you like it is magic. It is not magic, but I'm just telling you how it is reflecting onto the total, right? Yes. 18th transaction, please.
Manohar invested further 12,000 cash in the company's share capital.
Okay, so he has invested more in the business. So if the owner is bringing more capital into the business, the equity goes up, right?
Yes.
Yes. So how much equity goes up, please?
12,000.
12,000. Someone is someone's name has popped up. Let me allow them. Yes. Okay. 12,000, right? And he's bringing cash. So my the cash in the business also goes up.
Yes.
See, the balance is matching. I think we can finish this question if you all are fine, right?
Yes.
Yes, sir.
Yes, sir.
Because then it would be in a flow. And so what I'm going to do now, I am going to share the template of this question, and you can try this on your own in your Excel sheet. I will share the template of this, and you can try to solve this on your own. Fine?
Yes, sir.
Yes. Okay. 22nd transaction, please.
Billed customers for services 19,000.
19,000. You are billing the customer, so you are not receiving. It is a credit transaction. So when you are, so is it your income or not? Tell me. Accrual concept or revenue recognition concept, realization concept. It is your income, right? Because you are billing your customers.
Yes.
When you are billing your customers, the income is due. So it is earned because you have provided services, and it is receivable because he is not paying you right now. How much?
19,000.
19,000. So now what to do with the second part, beta? Second half of this. He's not paying you, right? So cash cannot go up. He will pay you, right, in the future?
Receivables.
He will pay you. So when he will pay you, it is your asset, right? When someone promises you to pay, that is your economic benefit. You will receive that money from the future, in the future from that person, right? So I will call it accounts receivable. Right? And the value is how much? 19,000.
19,000.
Right? Next, 27th data, please.
Paid office rent 2,500 and electricity charges 1,200.
So can I club it together? How much total you are paying?
3,700.
3,700.
So cash is reducing by 3,700.
Yes.
Yes, sir.
So where else the entry should go? Tell me, beta. Where else this entry should go?
Equity.
Equity, because expenses reduces the equity, right? Expenses reduces the equity, right? We discussed that. Income increases the equity because it is just like that situation. My personal balance sheet. If I am paying my telephone bill, my cash balance reduces at the same time. That cash is gone out of my hand. So my claim, it is not my cash anymore because I have paid. So my equity also reduces, right? Okay, next please dividend paid. So dividend would also reduce equity because dividend is paid to yourself. So when you are paying to yourself, cash reduces from your pocket. Just a second.
4,000.
4,000.
Yes.
And when I'm paying myself from the business,
Equity
the
reduces.
capital in the business also reduces. So minus 4,000 from equity also. समझो बेटा, जब आप बिजनेस में कैश लाते हो तो कैपिटल बढ़ता है, तो बिजनेस में से निकालोगे तो कम हो जाएगा ना, है ना? आप जब बिजनेस में पैसे लाते हो तो इक्विटी बढ़ता है. When you bring cash in the business, equity goes up. When you withdraw money from the business, the equity goes down. Very simple, right? The last transaction, please.
Prepare the monthly payroll to be paid on February 1, 11,500.
What is payroll? What is payroll, please? What is payroll? Payroll is like salary statement. So you are calculating the salary for everyone. Salary, right? So salary is due. It is like this, that I every month I provide services to Nirmal University, but the salary is paid on the next month. So the payment is done later, but it gets accrued before. It is accrued before, the payment is made later, right? So how you are not paying cash. You are not paying cash. Remember this, huh? Okay. So how much? What is expense will reduce the equity, guys? This is expense. So expense will reduce the equity, right? How much, beta? Please.
11,500.
Right. Okay. So, but I'm not paying. The company is not paying. So expenses are deducted because of accrual concept or revenue recognition concept or realization concept or matching concept, whatever you call it. Doesn't matter, right? The company has to pay in the future, right? The company has to pay in the future, right? So it will minus from it will be added in the payables, accounts payables. I do not have a separate column for this. You can when you practice, you can have a separate column under liabilities. So you have two liabilities: accounts payables plus salaries payable, and you can write 11,500 there, right?
Sir. Explain again, please.
I will explain one more time.
Yes.
Salary is an expense of this period or not?
Yes.
So it is an expense I have deducted from equity.
Yes, that's correct.
Whether the company is supposed to pay or not.
Yes.
If the company is going to pay, it is a liability, right?
Yes.
And it has to increase liability, right?
Yes, sir.
So I have increased the liability by writing this in the liabilities column. Right?
Got it. Yes, sir. Yes.
Ideally, I should have a separate column for salaries payable, but because of time constraint, I'm not spending time on calculation. You can write 11,500 there, and the total should match. See, so the total is matching.
Yes, sir.
So guys, I don't know whether I have gone fast or not, but we are done with this question that was planned for today. So next time I will start with the same question and I will discuss again maybe for a few minutes, and then we will see what we can do. Right? Hello?
Sir, if you could
Yes,
give one more
Yes, sir.
for practice.
Yes, sir.
I will send the entire file, and I have also mentioned, can you see the tabs below? You can see the tabs, right? You can see the sheets below, right?
Yes.
So there are 4 more questions there. The questions are there, the templates are there, and the answers are also there.
Yes, sir. Okay.
So you can practice. I'm giving you in the examination. I may not give you template, but I'm giving you template right now. Right. Second, we maybe start using cases from next class onwards. So what I'm going to do, we will circulate the cases to you through Moodle. So please keep on checking your Moodle. Maybe today, tomorrow, I don't know when the cases would be available to me from the office or from the library. But I will upload the cases or give you the link or whatever I could do through Moodle, and I may send a mail also reminding you, right? So please come prepared after reading those cases. So I will start with this question, and then we will focus on that case, of course, right? Okay. And second is, for practice, anyways, I'm sending you what else I was going to tell you. Okay, do you have any questions? Does anyone have any question? Hello? Anyone have? At least everyone say yes or no.
No, sir.
No, sir, no questions.
No, sir. No.
No, sir. Rohit, your mic is on, please.
So what I'm planning to do now, I want to keep a remedial session. Those may be suffering, right? Or maybe struggling with certain concept, right? Let me find the ideal time for me and both of you. When you guys are normally available, please. Hello. When you guys are normally available after what?
Sir, Saturday?
Saturday, tomorrow. This Saturday you are having, right?
So tomorrow we are having guest lecture.
Next classes, sir.
Tomorrow there is a
Who is
guest
I
lecture.
think Rohit has come to the class. I saw his face also.
Yes, sir.
Rohit, you are there?
Yes, sir. Yes, sir.
So Rohit, can you mail me? Just mail me saying that you are the seer of this section. So in case I have to communicate with you or ask you something for the entire section, I can mail you and ask you.
Yes, sir. Sure.
Right. So maybe tomorrow or maybe on Monday we will have a remedial session for maybe 1 hour, right? So you can bring all your questions to me. I would appreciate if you could raise the question and send it to me before the session so that I could plan properly, right? Otherwise, someone would have a doubt from X concept and someone would have a doubt related to 3rd or 4th class, and that would not be good for the entire section. So please send a list of doubts also if possible. If you don't know anything, then also you can mail me, right? So please Rohit, mail me, right? So that I know your email ID and I can also communicate with you, right?
Sure.
Yes.
And I will also share my, anyways, the entire batch has the mobile number, but that mobile number has issues sometimes. There is a network issue, right? So Rohit, I will talk to you. I will give you my extension number, which is also there in the outline. And I will also communicate few more things. So please mail me, beta. Thank you. So guys, I'm ending the session. Thank you so much. Have a great day.
Thank you,
Please
sir.
feel free to ask me questions. Please
Thank you, sir.
Thank you,
Yes,
sir.
sir, we
Sure,
were
sir.
supposed
Thank
to
you, sir.
celebrate
Thank you,
Shriya's
sir.
birthday.
You can celebrate the birthday. Yes, please go on.
Sir, can you please stop the screen sharing?
Yes. I hope there is nothing which could affect my job, right?
No, sir.
No, sir.
Sir, if you can also switch off the
Sir,
recording.
Can you all?
Recording is not in my.
I'm recording it.
Recording is done by system.
Can you turn on your cameras, guys?
Yeah. Can everyone turn on their camera?
Can
and Shriya,
everyone?
you too.
Yeah.
Shriya, you do especially. Yeah, she's here.
I can't see her.
Aditi.
Okay.
I can.
कहाँ है?
अरे
तुम
ये
लोग
भी ना
छोड़ लो।
1 2 3 चौथी लाइन में है ना, 5वीं
पिन
लाइन में।
करने दे।
Guys, let me
चलो चालू
keep the meeting,
Yes,
but I
sir.
will just I will move to some other activities. I am not listening. Do not say or do
Sure.
not do something, right? Please, because it is recorded, right? Yes.
Oh,
Sure.
Rohit, are you recording or Yash, are you?
I'm recording.
Yes.
It's recording.
So क्या announcement करना है पहले या should
Announcement last में कर देंगे.
ठीक है.
First, let's sing a song for her. First, take the lead. First.
He's not here.
Spurs.
Hello. हाँ ये रहा.
हाँ बोल.
1 2 3.
बार दिन ये
Happy birthday to you. Happy birthday to you.
Happy birthday,
Shriya.
Priya. Happy birthday
to you.
Okay. So there is going to be a Zoom party at approximately 4 o'clock today. So I will
last
send
for only
Rohit.
half an hour.
एक से यश 4 o'clock नहीं होगा, 4 to 6 सबकी वो है लाइन वाली.
उसके पहले रख लेंगे. पहले रख लेते हैं.
पहले रख लेंगे. हाँ.
4 to 6 क्या है?
लाइन.
तो उसके पहले रख लेंगे and it will last for only half an hour, guys. So
30
request you to come.
तो 3 o'clock रख लेते हैं. तो कुछ वैसे भी आज अपना सेक्शन नहीं है. वो
and for some time, Shriya, you will be removed from section A group, okay? Because we have something to share among all the people. You will be removed, okay?
Because if जानी हो तो मेरे को DM कर सकती है.
तू मार खाएगा यश अगर तुझे कुछ बोला.
यस ब्लॉक्ड है.
ये मीटिंग रिकॉर्ड हो रही है सर.
चलो सर की job है भाई.
Yes, I just joined in. Shriya, I think Shriya, it is your birthday, right?
Yes.
So happy birthday, Shriya. I hope the COVID-19 situation gets resolved very soon, and you all can meet each other and celebrate all the birthday parties and all that.
So we are meeting today. She lives in Ahmedabad only, so me and Shriya are meeting today.
Okay, great. So shall I end the meeting, or do you want to say?
Yes, sir.
Thank you, sir. Thank you so much, sir.
Thank you so much, sir.
Yes. Thank you so much. Have a great day. Shriya, have a great day and great year to you, right? Thank you so much, everyone. I'm ending the meeting. Thank you. Bye.
Bye-bye.
Yes.